You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back. It is Wednesday. It is time once again for the Futures Rundown. My name, of course, Mark Longo from the Options Insider Radio Network. You're home now for a few years of options and indeed now futures podcast goodness. Of course, if you want to get access to it all, make sure you subscribe to the full network, wherever you get your favorite podcasts. Otherwise, you're missing out on sister shows like This Week in Futures Options every Thursday, which you should be checking out if you're listening to this show. And of course, if you want to check out more fun, we had a lot of fun yesterday and last week on the Pro, theoptionsinsider.com/pro is the place to go to learn about that. A lot of futures talk making its way onto those shows as well. So check it out if you are so inclined. As we check out who's joining us on the old Futures Rundown program this week, I'm pleased to welcome back on Mr. Brent Friedman, the managing partner over there at Winhall Risk Analytics and also a contributor over there at OptionMetrics. Brett, welcome back to the Futures Rundown, sir.
Thanks for having me.
Last time you joined us was April 1st. A lot's gone on in the market since April 1st. I'm not sure if you noticed, Brett, a little bit of a dust up in the Middle East, kind of shaking things up since the last time we chatted, sir.
Well, things are different, but as in most things, things are different and some things are the same. Considering I'll when I speak about crude in a little while, I'll go over that in specific.
Oh, is something happening in crude? I'm unaware. I guess I must have missed that one, Brett. Oh, well, I guess we should check it out then. To the trading pits we go.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the Trading Pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we do just that. We dive on into the futures market, see what's lighting up the tape out there. And Brett, before we get to all the movers and shakers we have on the docket for this week, as I was joking at the top of the show, it's been a little bit since you've joined us, and obviously a lot of action, a lot of the attention in the world of futures has been fixed squarely in the energy realm, in particular crude, for obvious reasons. It's been interesting to watch this, interesting in many different regards. A lot of people thought crude was really going to explode to the upside when this conflict kicked off, and we certainly did see some impressive upside moves, but perhaps not to the extent a lot of people expected. We did see some aggressive downside moves shortly thereafter. The vol's kind of been all over the place. I was just joking on our options show not that long ago that, you're in strange markets when WTI vol is nearly 2x nat gas. It's not usually that setup. Usually it's the other way around. So, things are certainly interesting in the world of energy. But since the last time you and I chatted, Brett, you've been actually out there crunching the numbers. You've been looking at the vol and what's actually been cooking in the world of crude and comparing it to a few let's say, interesting flashpoints like, I don't know, March and April of 2020. I'm not sure what happened then, but it's kind of a wild time, so I hear, in the world of crude. So, Brett, you've been crunching all the data since the last time we chatted. Why don't you break it down for our listeners? What's been catching your eye in the world of crude and crude vol, sir?
Well, even worse than crunching the numbers is that I remember that I've lived through several of these disruptions in the crude oil market, beginning all the way back to Gulf War One, Gulf War Two, and then various other events since, including the pandemic. And so this is just the latest episode of crude disruption. The difference with this one, though, is that I don't think I've ever lived through a crude disruptive period that has more doom and gloom that didn't come true than this one. At the beginning of the war, you would have thought that, oil was going to go to $200 and we'd all be driving Flintstone cars around because we couldn't afford gasoline. And guess what? None of it really happened, and there was a lot of very, very disappointed bulls. Despite the fact that that's true, you still read in the press that, especially a couple months ago, and you still read it every now and then, that we're going through a period of unprecedented volatility in the energy markets, and that's just not true. By any standard, the period from March through May of 2020, the pandemic period, was much more volatile than the current period. And but then you have to consider, how are we measuring the volatility? If you go on a percentage daily price change, when you get large daily percentage price changes, people tend to think that makes a market very volatile, and indeed it does. But when you look at those numbers, 2026, in the current environment, from the negative price standpoint, negative daily price changes, out of the top 10, there's only 3 in 2026. Most of the others come from 2020. On the upside, you don't get any of record price change. So, as a matter of fact, the high that we reached in Brent, and at the peak of this stuff, was only the 288th highest high in crude oil.
That's what leapt off the page to me when I was looking at your data here, Brett, was everyone, I think myself included, assumed this was going to be a real upside shock. And yet, lo and behold, all of the big movements in this conflict were all to the downside. Did that surprise you, Brett?
Honestly, it did. I'm not going to say I'm one of these people that, in the beginning of the conflict, given the supply situation, I'm not a supply demand guy, but the supply situation looked particularly dire, and it still does. But what they didn't recognize was, Chinese demand came way down, which kind of balanced things out.
Yeah, that seems to be the interesting wild card, and we don't want to get into tinfoil hat theory, and that there certainly is a lot of that. If you start doing some interesting internet sleuthing on the weekend, listeners, I encourage you, start digging into what happened to Chinese oil consumption during this conflict. And it's amazing how one entity, Brett, can just pretty much turn off the switch on half of their consumption just like that, like turning off the light. That's amazing how things like that could happen. But I digress, Brett. Have at it. You've been crunching a lot of interesting data here, sir.
So, but there's, but by any standard, when you look at the levels of implied volatility that implied volatility reached, I think the highest it reached, just give me a second, was like in the low hundreds. During the pandemic, when we had that big downside move, it went up to 150. So we're still, and currently, what are we trading? We're trading, I think, in the 50s or somewhere around there, which is an impressive number for crude oil, but it's nothing, like I'm going to start getting incredibly insane about it. So this has been one of the more disappointing periods. And it's kind of like, every single time that the market starts gaining momentum, then something happens politically, like, oh, negotiations are back on, then the market falls apart. And I'm not totally sure how many times that we have to go through this sequence until the market decides that that's just not true. It's not happening, that this is going to be a long-term conflict, with probably very little resolution in sight. And So, but that's the sequence, and it's kind of like watching. It's kind of like watching a movie with really, really interesting action sequences, but the parts in between are really boring.
Yeah, and it never really gets off the ground. Maybe it never gets to that 11 that you were hoping for in the action sequences. The sequence get to about a 6 or a 7. They're decent. You know, you bought the IMAX ticket, Brett. You bought the popcorn. You paid for a babysitter. You paid for parking. You want them to bring the heat, bring the action, and they only get to about a 6 or 7. I like that. The most disappointing crude rally ever, maybe, Brett. How about that?
It is. I mean, it's the most boring one, too, I have to say.
Yeah, you're not wrong.
I mean, the much more interesting, as far as I was concerned, was, you know, the pandemic when it went negative. That was truly an interesting market. You know, we had never seen a negative settlement for a mainstream exchange traded commodity ever. And, you know, and compared to what people were predicting for this market, you would have thought that, you know, we were going to see tremendous price action, but we didn't. And, you know, even if you go to a distillate, like you go to RBOB gasoline, even that, the price changes have not been in the top 10 since 2008. They just haven't been. And that's just a matter of fact. So what can I say? You know, it's just not, crude oil is just not doing what was really interesting to what I thought was that when it didn't act, this is sort of a market philosophy, market psychology thing. When it didn't act the way it was supposed to act immediately, when it didn't really start becoming bullish, fundamental commentators were saying that the market was wrong, that they hadn't figured it out yet. And eventually they'll figure out that the supply situation is much more dire and the market will start becoming much more bullish. I have never seen more people arguing with the market, you know, and trying to fit their fundamental into the market action.
Maybe with the exception of the AI rally. A lot of people hate this AI rally too. I've seen a lot of people really bending over backwards to naysay that one as well. But you're right, the crude oil rally definitely up there, sir.
But the only people in my experience who do that are people who are not marked to market on a daily basis. Yeah, go long. Let's see how long you last. You know, sit through a 6 or 7% down day and see whether you don't get a tap on the shoulder from the risk manager saying there's something going on in this market that you don't understand. And that was very true in crude oil. And I detected it after about 2 weeks. Like, it's not going up, guys. There's something cooking here that you just haven't figured out yet. And then there was all the, you know, after the fact, after the ceasefire, there was the apology tour of various fundamental analysts who were saying, well, we didn't really, you know, account for this, and that. But in the meantime, back at the ranch, it just didn't behave the way you said it would. And now we're back. I mean, we're back to saying that there's a severe supply disruption. And to that, I agree with. And, you know, the market is getting much more backwardated than it was a couple of weeks ago. So the supply situation is coming back. And, you know, but I think a lot of people, they base and fundamental analysts, true, that are used to the energy markets, they base their analysis on gasoline. So when gasoline starts getting really perky, they start like really looking at, you know, it's getting very, very bullish, and it sort of leaks into crude oil, their analysis. But when gasoline sort of didn't react, you know, we weren't looking at $5 a gallon gasoline, we were looking at like $4.35 or something like that, you know, and then it started drifting back down. Everybody said, okay, energy, you know, the energy market is boring. Let's move on to something else. It was amazing how fast it faded from attention. You know,
you're right. It was fascinating to watch because you're right. There was a clear dichotomy between what the fundamental picture was setting up and what was actually happening in the market. And it was fascinating to watch. That's probably why a lot of those Chinese tinfoil hat theories have been floating around online of late. People trying to justify this price action in this market. If you're a visual learner, listeners, and you like to see a nice chart or table to exemplify just how perhaps disappointing this rally was during this latest conflict, I encourage you again to check out Brett's paper and go to this table here. He has the top 10 largest negative price changes in crude oil since 2008. So obviously post great financial crisis. 3 of them were in this most recent conflict. So again, not upside moves, but downside moves, including number 8. That was on March 23rd of about 10 2/3%. Number 7, March 10th, 10.86%. And then the number 4 move was on April 8th, about 12.8% to the downside. If that doesn't say it all, Brett, I don't know what does. I don't think anyone goes into a Middle East conflict looking for the top 10 biggest downside moves. That's not what you're going in for, sir.
Well, I think the doom and gloom people so oversold their analysis and got people so incredibly crazy that when it didn't happen, everybody went like, phew, that was close. And, we got to get rid of this stuff. And there was just a race for the exits. And this is, again, I haven't counted them up, but I'm guessing there's probably been 5 to 10 of these, closer to 10, since the war started, where, crude's creeping up and looks like it's ready to go, ready to boil. And then it's like, well, negotiations are coming back. We're talking again, and everyone seems reasonable, and it's kumbaya time. And then that turns out to be wrong, and off we go to the races again. So it's a recurring pattern, and recurring patterns get kind of boring in trading.
Well, Brett, if folks want to check out your paper, and I encourage you to do so, listeners, it's called Crude Oil Old News. Where should they go to read it for themselves, Brett?
OptionMetrics.com. As well, I have some other stuff on crude oil in OptionStrat.com, which is an options trading platform.
All right, so should be some good stuff. Now we have to get into what's lighting it up this week. And stop me if you heard this before, Brett, but there might be some crude in this week as well. So stay tuned. We're not done talking crude yet. Let's go to the upside first, listeners. Let's keep the party alive. Why not? Number 5 to the upside this week. It's our old pal sugar, number 11. Did you have that on your bingo cards? Up about 8.4% this week. And number 4 product we just spent a lot of time talking about. It's our old pal WTI, up a little over 10% this week. Number 3, not welcome news to all you folks out there filling up your SUVs every week. It's RBOB, up nearly 11% this week for number 3. Number 2, it's Brent, up about 11.5%. So Brent stealing a bit of a march on WTI this week. And the big dog to the upside, this one's been dominating our biggest gainer charts for the year pretty much since this conflict began. Looks like it's extending that lead this week. What are we talking about? Yeah, we're talking about heating oil, up about 13.25%. I know we spent a lot of time talking about crude there, Brent, but you spend a lot of time in the rest of the energy complex, including heating oil. And then I'm sure you have a lot to say about sugar number 11. Doesn't everybody?
I'm afraid that one of the symptoms of, or one of the byproducts of all the action in energy is I've not been looking at ags lately, or softs or anything like that. So I have no comment on that. I do have a comment, however, on heating oil and gasoline. I mean, that's obviously, the distillate cracks are at all-time highs. I mean, they really are. So refiners are just making money hand over fist. I mean, there's a lack of refining capacity, and there's a lack of input. So of course, cracks are just through the roof. So that's why heating oil and gasoline they're sticky to the downside and very sensitive to the upside. They sort of have an asymmetric price profile going on there.
All right, listeners, let's see if we can find some better news for your wallet to the downside this week. And we got a little bit of it. How about number 5? It's feeder cattle, giving back some. It has a long way to go, but giving back about 2.6% this week. So I think you'll take what you can get if you've been suffering over there at the butcher counter of late. Number 4, it's everyone's favorite complex. It's cash settled butter, off a little over 3, about 3.1% this week. Number 3, I've joked about this one before whenever it pops into our upside and downside. This is very much a moving target. I'm sure if I re-rack this right now, it might be somewhere completely different. What are we talking about? It's our old pal, the VIX. But at the end of the day, it is a tradable future, so it comes in on our list this week. Number 3 to the downside, off about 3.5%. Number 2, it's cocoa. Again, we talked about this one before. It's been kind of a very beaten up product, given back about 4.6%. And then talk about beaten up products. This one's been losing pretty much since we launched this show, and losing a lot this week. What is it? It's our old pal OJ, giving up about 12.3%. So, Brett, I suppose if you want a glass half full analysis of our downside this week, it's that maybe your breakfast table getting a little bit cheaper this week, sir.
Yeah, I mean, OJ has been coming off for a while. What I find interesting though is reading the financial press, looking at social media, it just shows you how markets work or the market psychology works. Gold and silver are not in the forefront anymore. And in March and the Q1 when they were making new highs, they were at the top of everybody's list as to what is going on with the economy, and that they were always brought forth as sort of the avatar of everything that was going on. Whether you have currency debasement, central bank purchases, geopolitical unrest, we have inflation, we have ETF flows going into all the precious metals, and we're just so anxious about the future, and therefore you have to buy precious metals. And whoever did that bought the high. And it's gold is 18% off the highs, silver is almost 44% off of the highs, and their implied volatilities are almost half or more than half of what they were at the highs. So, but the funniest thing that or the most interesting thing about the lack of upside movement in the precious metals is that all the fundamentals that were brought forth as to why precious metals were such a buy and what made them so bullish are all still true. Every single one of them is still true. And if I had no screens whatsoever, and someone walked up to me and said, we have a pretty serious war in the Mideast, we have an inflationary impact, the dollar might be a little shaky, this, that, the other thing, you want to buy gold? And I say, yeah, probably. That sounds like a pretty good setup to me. And, but the answer is, why isn't it working? It's working because gold and silver towards the final part of their run up were pure momentum plays. People were buying them because they were going up. And it's as simple as that. And at the top, they got destroyed. And now they're all out. And the market reverts back to what it normally is, which is sort of a semi-industrial commodity, So that's what's going on. So there's really nothing going on in the two commodities that were the most popular in the beginning of the year.
Yeah, Q1 was a wild time. I think everyone turned into an amateur metallurgist at that point. Yeah. We talked more about the metals in Q1 of this year than I think we have in the previous 19 plus years of this network combined, Brett.
And now there's nothing to talk. I mean, to continue the film metaphor, this is like an incredible star, an incredible movie star that hasn't made a movie in a long time. And everyone's wondering what the hell happened to him.
I do like your analysis, though, that it just got priced beyond the flight to quality asset. It was the flight to madness at that point in Q1. There was beyond flight to quality. So you couldn't really, there's no room to fly to quality anymore when the conflict started. It had already been priced in 10x.
When I read someone's analysis that that crypto was falling at the time when precious metals were increasing, that people were getting out of crypto to buy gold and silver. So in other words, people who made a bad decision are making another. So why would I,
That's when you knew you've lost the thread. That's the crypto rotation usually goes the other way. But yeah, fascinating
but,
stuff.
One of the more interesting things that I think I mentioned it on previous shows is that there's something called the Economic Policy Uncertainty Index, which is put together by two professors, and it comes out on a daily basis. And basically, they do news sweeps of various topics and put together an Economic Policy Uncertainty Index. And it peaked out in April of, as you would expect, April of 2025, when all the tariff stuff came out. And it was propelling precious metals because people were very uncertain about economic policy. Since then, though, it's been coming off pretty hard. This year, economic policy uncertainty has been coming off. That index has been declining. And I think it's because, there's one thing that is certain, is that it's uncertain. So people are just getting used to it, that you can't, that the economic policies change from day to day. But that has been coming off hard. And that's the only fundamental I can bring forth as to why gold and silver are coming off or are just not reacting the way they used to. But the real reason, as far as I can tell, is the market moved on to a new toy.
New shiny stuff. Let's see if we can find some of that new shiny stuff in today's price action, listeners. And there is definitely one name that's leaping off our top 10 today. We don't normally see in our top 10, so I think you'll spot it right away when we get there, listeners. Cost you 358,000 contracts to break into the top 10 today. That's actually decently active. That's above our threshold of right around 300,000 contracts. That gets you to the 30-year. Just about everything in our docket this week is a September contract, with the exception of 2 this week, including number 9. I think that you're going to spot this one right away. This is the one that certainly left off the board to me. It's corn. We don't see corn. I'll have to go back and look. I can't remember the last time corn broke into the top 10. Yet corn is there at number 9 today. It is the D's contract, 407,000 contracts. So, when corn's breaking into the top 10, that something is up out there in the corn market. Sure enough, it was the day of the WASDE report, the crop report this morning. So that's driving obviously a lot of flow in corn, all the way up to number 9 today. Number 8, the Ultra 10-year, 539,000 contracts. Number 7, our other December contract is 3 months old for 588,000 contracts. Number 6, it's the little S&P, aka the micro, 677,000. Followed right above it by the big boy E-mini, 692,000 contracts. Number 4, it's the 2-year, 954,000 contracts. Number 3, it's the 5-year, going a little bit farther down the curve, 1.25 million contracts. Number 2, it's the 10-year, 1.65 million. That means the big dog, once again, is the NASDAQ Micro, 1.73 million contracts. But Brett, the real reason why I brought you on the show today. Let's go deep into corn. Let's talk all about corn and the WASDE report. I know you have it in your hands right now, sir. We'll spend the remainder of the show on it. Have at it, sir. The floor is yours.
I have no clue. I think the last time corn was in the news was possibly in the early days of the Ukraine war, but I'm not sure. I don't follow this.
Yeah, a lot of corn, also wheat in the news back then as well. But interesting stuff here. Yeah, WASDE obviously driving some flow. But I was joking earlier, we talked about this being the most disappointing, pick your negative adjective of choice, rally in crude ever this year, and you could certainly make an argument for it. But another one that we say, and certainly one where we see a lot of perhaps dichotomy between some of the fundamental analysis and some of the market action, is in the equities. It's often said this is one of the most hated rallies in quite a while. We see a lot of equities in our top 10 yet again today, sir. What are your thoughts on this wild equity action we've seen of late, sir?
It seems to me, I'm not a giant AI person, but it seems like the AI trade is back. And it suffered for about a month where people were worried about overspending and stuff like that. It seems like the AI trade is bullish, and then some new fundamental comes along. It lasts for like 2 or 3 weeks, and then everyone, for some reason, people forget about it, or it outplays itself, and then off we go to the races again. Because, the results are the results. I mean, if these companies were having earnings results that were just like piss poor, I would say, okay, this thing has no legs. But the earnings reports are incredible. And and so this isn't like, 2000, the dot-com crash where they were running on nothing. These companies have excellent numbers. So it's really hard to argue with it, although, as you say, a lot of people this is the most hated rally I think I've ever seen. Again, people constantly arguing with the market. And that's an argument I have never won in over 40 years of trading. Never, ever. So, eventually you have to say, I'm the wrong way around on this. What are you going to do?
And obviously we have a lot of rates in our top 10. As usual, rates in the headlines very much again these days. I guess we're playing the Fed dance game again, Brett, where everything has to be backed into a Fed decision. We saw a terrible jobs report last Friday. That was all of a sudden bad news is good news. The market rallies off of that. So we're kind of in that weird hovering around the Fed decision time. What are your thoughts on what's cooking with rates and the Fed, sir?
Rates I don't have a giant opinion about, but I know when the market generally, just from experience, when the market's looking at like monthly job report numbers and employment numbers, they don't have anything else to play with. That it's just, these are they're incredibly variable from month to month. There's a million exceptions and, adjustments and this, that, and the other thing. It's like we don't have anything else to think about, so we'll base it on this one. So I tend to ignore all that stuff in favor of much more general trends.
One thing you can't ignore is our biggest gainers and losers for the year so far, listeners. Let's get down to that right now. Let's go to the dark side first. We'll save the green, the optimistic stuff for the end, listeners. And once again, our old pal, Mr. VIX, sneaking onto the list, off about 16 2/3%. So VIX swinging into one of the biggest losers for the year. Obviously, we started the year a wee bit loftier than we are right now, listeners. And obviously, vol has been getting annihilated. This is that seasonal time of the year, the dog days of summer. Usually this and, mid to late December are the two times where vol typically takes a hit, and we're seeing that play out right now. Again, if I re-rack this report, even right now, the chances are VIX would be somewhere else entirely. Number 4 to the downside, listeners, it's palladium. So we're going back to the precious metals that Brett was just talking about, off about 18 3/4%. Once again, our old pal butter sneaking in here again, this time at number 3 to the downside for the year, off 19.5%. Number 2, it's nat gas. This has been a very interesting year for nat gas, to put it mild. You can say that for a lot of products. Obviously, we just spent half the show talking about crude. You could certainly say that for the equities. You could certainly say that for the metals. But throw nat gas in that conversation as well. Started out of the gate super hot, and then kind of all bets were off the rest of the year for this product. And right now, it's off nearly 25%, 24 3/4%. Again, midsummer, usually seasonally a weak period for nat gas as well. So take some of that into account. But still, nat gas coming in. Number 2 for the year. What is outpacing it? You know what it is. It's one of our favorite losers here on the show. It's OJ, off a little over 31% for the year. Now, Brett, we spent a lot of time talking about crude and the energy complex. We didn't really talk a lot of nat gas. Are you a big nat gas watcher? And if so, what are your thoughts on how it's played out so far this year?
Quite honestly, I have not been watching it lately. Although I have been watching LNG a little because of its applicability to the current crisis, the current energy situation. One thing I have to say, when you said that, it's summertime, as long as I've been trading, I've always noticed that natural gas traders are always shocked that seasons change and temperatures change as a result. They're always shocked when it gets cold in the winter and gets hot in the summer. Always. It's just an amazing thing to me. So the first cold day, you'll see it rally. It's like, yeah, that's what happens during the winter time every single year. So I'm always shocked by that. And apparently it's playing out again.
Yeah, nat gas played seasonality pretty well a couple of times this year. You're right. It hit astronomical levels in the crazy depths of winter in January. Go figure. And then kind of fell off a cliff right after that, and now continues to do so here in the depths of the dog days of summer, listeners. So certainly been an interesting year. Some parts playing out like textbook, others not so much, but that's what makes nat gas interesting. All right, to the upside we go, listeners. Number 5, this has been a product that's been on our radar for the better part of the last few months. A lot of different uses for this product. What is it? It's soybean oil, up about 40% so far year to date. Number 3, it's our old pal WTI, up about 45.5%. Number 3, it's Brent, once again stealing a march on WTI, up 47.5%. So a whopping 2% between those so far this year. Number 2, you can pretty much guess the rest, listeners. They've been dominating the tape for a while. Number 2, it's RBOB, up nearly 69%. And the big dog yet again, it's heating oil, up 110%. Brent, we've said a lot about all things energy at this point. I'm curious, from your perspective, you were talking, a lot of your analysis that we were just talking about with your charts and graphs was keyed around Brent. There was some interesting movement in that Brent WTI spread earlier in the conflict. As you said, right now, they're about 2% separating them right now. Did anything catch your eye in terms of that spread throughout this year that was interesting? And if you have anything else you want to add about your other favorite product, soybean oil, have at it, sir.
I did want to make, I'll disregard your comment. I did want to make one comment about the VIX, actually. And if you look at the VIX, because I've noticed, obviously it's declining because it moves inversely to the SPX, the way it's structured, that's the way it works. But the VIX futures are are in fairly steep contango, more contango than they are normally. And I think that's just a function of the front comes down and the curve gets steeper and steeper as the market climbs. I don't think it really means much for the level of the SPX, but it is an interesting note that the steepness of the VIX curve is fairly is historically high. One other comment about palladium. Palladium's an interesting thing in that basically it rallied during the precious metals rally, and there was some retail participation for people who were just too cool for gold and silver. They had to do palladium. I think that's one of the reasons it came off so hard, because there were a lot of people involved in the palladium market who should not have been involved in the palladium.
I definitely got that perception. We said a lot of people hitting us up about palladium, all the other, you're right, too cool for school metals that normally would never be on their radar. You could tell this was not maybe a place they should be.
Palladium's an industrial metal. It's not for retail people. You're
not buying your palladium ingots at the Costco food court the way you are the silver and the gold. Well, Brett, that music means we've come to the end of a very interesting sojourn through the world of futures this week. But before we go, we've hit on a lot of complexes already. But there's any other products or complexes that are on your radar right now that we didn't have a chance to talk about on the show and you really wanted to discuss? Have at it, sir. The floor is yours.
Disappointingly, no. I'm probably going to write about the VIX for my next article, because I think there might be something to talk about there. VIX versus the dispersion indexes and things like that. So that's
the dispersion index. Yes, that's another interesting one. VIX, a very interesting product. It's almost like we should have a whole show on our network devoted to vol. Oh wait, we do. Yet another reason why you should be listening to the full network, listeners. Every Friday we go deep into all this fun.
The question the question that comes up about every month is the VIX broken? This is the constant question that people ask, because it's generally they're long and it's just not acting the way they would like it to. So therefore the index is broken. So that is a huge topic.
If you've been long VIX this year, it's been a challenging trade, to put it mildly, not just because it's been mostly downside, as we just showed. It's one of the biggest downside movers, but the brief moments of upside that we do get have been more short-lived than usual. We joke on our vol show, you used to have a few days, maybe a week or so, to get out of an upside move in vol. These days, it's hours, if not minutes, before any upside in vol just completely collapses. And if you don't monetize at least some of the upside, you completely miss on all of it. So it's a very challenging time if you're trying to play the VIX upside game, right? I feel for those people. That's why I don't play it, Brett.
if you're playing the VIX as like a fear index, if you're trading it like, I'm fearful, so therefore I need to buy VIX, you're not going to make any money. There's better vehicles to do that. Honestly, you should go into the prediction markets altogether if that's what you're worried about. So
there we go. VIX versus prediction markets. I smell a paper in your future there, Brett. About a year ago, everyone was talking to us about gold versus VIX. Maybe the new conversation is prediction markets versus VIX. Which is a better quote-unquote predictor? Mr. Brett, I see a hot article in your future. And if folks want to read all these cool articles you're putting out, once again, hit us, sir. Where should they go? What should they do?
OptionMetrics.com or OptionStrat.com.
There you go. Check them out, listeners. OptionMetrics.com or OptionStrat.com. Just search for Brett Friedman, Friedman. You should find all of his stuff there. Definitely check out that Crude article. It's worth a gander, I think, listeners. That is going to do it for us on the old show today. Not going to do it for us on the network, though. Back again after the closing bell, so a little under an hour to wrap up what's looking like a pretty active day in the world of options. Is it? Looks like SpaceX having a heck of a day. We'll find out on the Hot Options Report. Back again tomorrow with our good buddy, the Flow Master from SIBO, as well as Uncle Mike, to talk all things options on the option block, as well as the sister program to this one, This Week in Futures Options. Friday, back talking vol with Dr. Vix and other special guests, talking about all the action in the world of vol. As you can see, there is a lot to talk about. May have to get Brett on that show to go deep into some vol talk. And then we're back again next week, all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.